Today's episode has been 2 years in the making. It is rare that you're able to find someone who's been a top producing originator in the mortgage industry, turned state regulator, turned director of government affairs. And we have a lot of changes going on right now in the mortgage industry. Everything from LO comp to the CFPB being declawed to changes with the NMLS, and what the heck is going on with real estate agents being paid by lenders to do lead generation activities. We are going to cover all of this, as well as get to know one of my favorite people in the mortgage industry. This right here, mortgage professionals, this is what we call a can't miss episode. Let's roll. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This guy was born in Chicago, Illinois. He still screams bear down. Spent a good portion of his life in Ohio, where he was a state regulator. Today, he lives down in Florida, just a hop, skip, and a jump away from me. He is Mr. CMB, so much that he has it tattooed on his chest. He's a former collegiate football player turned referee. He is my friend, the one, the only, Bob Niemi. Bob, welcome to TLOP.
Thank you, Dustin. Very happy to be here.
Yeah.
Long-time listener, first-time visitor.
Yes, long-time listener, first-time listener. And we should probably also acknowledge, for those watching us on YouTube, I call him Mr. CMB. He literally has his CMB pin on. He has it tattooed on his chest, and everywhere Bob goes, if you want a cool CMB koozie like the one I'm holding up, you can only see it if you're on YouTube right now, he'll give it to you. But Bob is the Director of Government Affairs for Weiner, Brodsky, and Kiter. That is what you're doing these days when Correct. It comes to your profession. But I think it's good to know that before you got into government affairs and regulation, you were an originator.
I was. I got in the mortgage business in the last century. Probably, I know you're much younger than I am.
In the 1900s.
In the 1900s.
Okay.
The latter part of the 1900s. But my year of being top producer in my group in the Chicago area was 17,800,000 and some whatever. So not today big numbers, but were at the time.
Well, if you go back, if you did $17 million in volume in the 1990s, I'm assuming that was probably at least 150 units.
Somewhere 180s, something upper 180s.
Yeah, your average loan size was like $130,000, $120,000. Yes. So, which is why I've always been such a big unit proponent. I'm like, look, do 100 plus units a year, you're a top producer. Mm-hmm. Like, let's not slap volume on there. You're in LA, you're in Manhattan. You're like, oh, I did 30 million. I'm like, yeah, you did 30 units. So I think it's good to know that. I didn't know that about you until recently. We're like, look, I know you look at me as like Mr. Compliance, but before I was Mr. Compliance, I spent 25 years on the sales side of things.
Just about. And I backed into being Mr. Compliance when a regional manager, I was working for U.S. Bank at the time, came down, fired my boss in a long meeting. Opened his office door, came over and sat down with me, and I thought, oh no, I'm going to be next.
Okay.
And she said, no, you got 6 months. You've got the worst producing production center here. The underwriting and processing is going to move to Cincinnati unless you turn it around. And I had 6 months to teach people who didn't want LOs, take full applications, do the right thing. And this was, early 2000, 2002. And it was, you get this right, and that's how I had to back into teaching the sales side of what is mortgage compliance. And from there, I've obviously moved into some of the other things you've already mentioned.
So you are a state regulator in the state of Ohio.
Deputy Superintendent for Consumer Finance with the Ohio Department of Commerce.
Was that with Cordroy, by any chance?
I did know Rich when he was the Franklin County Treasurer.
Okay.
We were both on Governor Strickland's Foreclosure Prevention Task Force back because I was also at the time the Columbus Mortgage Bankers president.
Okay.
And had the opportunity to get engaged, and that was when 2000 is about when I got the bug for advocacy, and that's what's really pulled me on the path that's got me to WBK.
Wow. So you're a regulator Is that a elected official, elected position, or are you appointed by?
I was appointed by the governor. Governor Kasich appointed me. I lasted just under 4 years before I left and went to work for a law firm. But the last 2 years, it was like 22 months of that time, I was also the NMLS Ombudsman, which was an elected position by CSPS and ARMR, the people that have oversight in the NMLS.
That was a lot.
It was a lot.
That was a lot. Now, let me ask you this. What do you do today? Like, what's your day to day? Because you're not an attorney, right? And you make it known, like, look, I work for attorneys. I work for a law firm, and you've worked for law firms for the better part of the past decade plus, right?
The end of the year will be 10 years.
Okay, but you're not an attorney.
I am not.
You play one on TV sometimes?
I don't. I try to point it out because there is some legal issue there about trying to sound like, because I do sound very compliant. I do preach that you need to understand what your policies and procedures are. You need to have all the regular oversight in. But I'm the bridge. My LinkedIn says I connect dots. Statutes are not written for mortgage people. Things that your attorneys are going to write for you and how they look at your policies and procedures, they don't always align. And here's another thing for you. Most mortgage attorneys do not know the mortgage business.
Get out of town.
Having been in both provides me that opportunity to kind of bridge that gap. I am visible in the business. I speak at different state conferences and others. We've been at different events. I'm on the board for MBA Florida. Part of that is business development and getting out and letting people know that, I'm part of Weiner, Brodsky, Kiter. We're a, 35, 40 attorney group in the DC area, mortgage specific. That's all we do.
Yeah.
And the names, Jim Brodsky, Harvey Weiner, Mitch Kiter, the people that are there, they're all still actively performing. And if you don't know the name Mitch Kiter, look him up. His video that he did for MBA about advocacy and crossing the bridge in New York, and every time his dad would point out, that's the bank that gave us the mortgage to buy the house we're in, and just the point of it, that's where I believe, because the mortgage profession, since I got into it, we do honorable things. We help families buy homes. I always tell people, you never finance a house. It's a home. Somebody's going to live there, and it's going to be home for somebody. Don't ever forget that. No,
correct. And that's, for all tuning in, right? It's like, look, nobody wants what we do for a living. We give out debt. Like, nobody wants a debt, but they do want a home. And that is what we do. And then many of us, we are the closest thing to a financial advisor these people are going to ever encounter. Therefore, if we're not being consultants, we're not being an advisor, we're probably not doing the best to our fellow mankind. But no, you said something, Bob, that I want to circle back to, because you're like, look, your job being that connector of dots, because you know production from 25 years, compliance, and you're working with a bunch of attorneys who don't necessarily know mortgage, although that's the field that they specialize in. It reminds me, I had a conversation with the CFPB like 3 years ago, and I talked to them for about an hour and 20 minutes, but the first 45 minutes was I had to explain to them their own rules.
Right.
Like, that was sad. I'm like, and this was a couple levels up, right? So I was up a couple levels, but they just didn't understand truly how it was impacting the consumer, because they didn't understand how loans work and how consumers are referred into lenders and the service that lenders provide. And it was frustrating because I was trying to have a quick, like, 15-minute phone call, like, hey, I'm recognizing some things that are going on that don't make me feel good about my industry. What are y'all going to do about it? And instead, it was like, oh, let me first teach you why your rule was written, what it's meant to do, and then how I believe a dozen or 2 dozen quote unquote bad actors are misinterpreting or not following this rule. So I can totally see where your job is so necessary in the space, because you do bridge that gap. Besides traveling the country and speaking and doing business development, and you do a phenomenal job, like one of the best jobs in the country of advocating on behalf of the mortgage industry. So thank you for that on behalf of all of us. But what does your typical week or month look like? Just so the audience can have a quick perspective. We can spend 90 seconds on this, so just high level.
No worries. To tie up your point about talking to the CFPB, one other thing that doesn't exist are
regulators. The CFPB, we can stop right there. Episode over.
We'll get there in a minute. But none of the people that make the regulations were in the mortgage business either. So they don't understand. And many times somebody else made the rule. And
Barney Frank was never an LO,
and
nor was Chris Dodd. Get out of town.
Nor was Rich Cordray.
Yes. Okay.
They understand how it works, but there's the nuances of how it actually works. So number one, what's my average week? There is no average week. We do a lot of M&A support. We do deal structures. We will do the licensing side. The part of being a former NMLS ombudsman and a state regulator, I have the opportunity to keep those relationships open. I always attend the NMLS annual conference and training, which, by the way,
boring. Is it? Is it boring or is it fun?
There's a good opportunity, and it will actually be in Orlando this February coming up.
Okay.
The week after Valentine's Day. In that conference, there will be an NMLS ombudsman. That's an open meeting. You don't have to pay to.
An ombudsman. Can you spell that?
OMBUDSMAN. Ombudsman.
Ombudsman.
Yes. When I was actually they called me the Ombobsman.
Oh, I like that.
Because
That's
I knew
cute.
both sides and I could answer the questions and how it would work. So,
but what is an I'm so sorry. I'm gonna rabbit hole this real quick. What does a ombudsman do?
The ombudsman does when somebody falls between the cracks between states. So if Georgia tells you to do this, but Florida tells you to do that, and it's like, wait a second, this doesn't quite fit. Or there's issues with the NMLS system that it's not working through. We had an issue a couple weeks ago. 9 originators were stuck with between some updates being in place with the upgrades and the modernization for the NMLS that were trying for temporary authority. And some of them went about 6 weeks without being able to produce.
Okay,
so
that's not good.
So they reach out to the ombudsman and they say, hey, I've got this issue. They're telling me it's going to be fixed.
It's like a mediator?
It is. It is a state regulator.
Okay.
Right now it's Jim Payne, who's the commissioner in Kansas, Office of the State Banking Commissioner.
Okay.
He is the 5th ombudsman. There have been 5 over the life of the NMLS. I was number 3.
Wow. Okay, let's say one person does it for the entire country.
Correct. All
that's
50
super
states.
cool.
And
Is that like a volunteer position or is that a full-time job position?
It's not a full-time job, but certainly when you're going through different changes within the systems, there can be issues that pop up and make it much more of a daily job to take care of issues. Certainly when I did it, and when they were bringing a lot of the other industries onto the NMLS besides mortgage, like money transmitters, I got to go to the MTRA, the Money Transmitter Regulator, and some of their conferences and get my butt chewed because things weren't working well or whatever. So it is maintaining those relationships and the other different things. That's where the government affairs part comes out. I am obviously an advocate for the mortgage industry. I'm an ambassador for MBA for the Southeast, specifically for Florida. I'll be speaking this weekend, actually on Sunday, to a state government affairs group down in Naples on Sunday morning. To talk about, how mortgage servicers prepare and what their programs and policies are for disaster recovery, because that's a big issue.
So you don't have a standard week, a standard month, which is probably exciting for you.
It is. It's very different, especially with the number of conferences. I made it to 13 state conferences this year. I think I did 42 presentations, webinars, or panels that I moderate. I love when I get the opportunity to moderate a panel. I can find, what they want to hear, find who are the local experts. I focus very heavily on the CMB community. I am the certified mortgage banker evangelist. I think, people that are professionals should work towards that. It's not right for everybody, but for those that are, it's been a big help. It's really been a great, the community of the CMBs has been one of the best things for my business career that I've done in the last 10 years.
Yeah, for me, it's interesting. I almost called it like my capstone because I spent so much time in production, and there were still like educational aspects of how the sausage is made that I was lacking. And I knew I could obtain that experience 2 ways. I could quit my job that was paying me a lot of freaking money that I love doing and go start an IMB and learn it the hard way. Right? Like that was, I just had dinner last week with an old friend of mine, an old colleague of mine, Eric Egenhofer with Novus Home Mortgage. And Eric told me that, his time and my time together at Waterstone Mortgage, he's like, I basically got a PhD in mortgage. And that's what most people did.
Right.
However, I needed to use my CMB as my PhD because I didn't want to take a massive step back in pay to go gain these experiences, but I needed to learn about compliance and regulation and servicing and secondary. So my CMB journey was very much that for me, where I now feel comfortable in any room you put me in. I can lead and I can hold my own. I will never be the best at servicing. I'll never be the best at secondary. You do not want to hire me to do any of your trades or your hedges. However, I can at least sit down and hold my own and have a conversation. Right. If I were, let's say, leading sales or running sales or starting a company, I would know who to hire and who not to hire. And the CMB experience definitely gave me that. When people call you, and we're going to get into our topic, like in a hot minute, we are going to be jumping into the CFPB, into LO Comp. We're going to be talking about what in the hell is going on with realtors getting paid by lenders. Is that even compliant? And then you brought something to my attention last week that I knew nothing about, that I'm like, whoa, why are more people not talking about this? And these are massive changes happening within the NMLS that could be very disruptive for our industry. And we're talking like within the next 6 to 12 months. So we're going to jump into that. But before we do, I just want to put a bow on, if you said these are the top 3 things that people are going to reach out to either Bob Niemi or Weiner, Brodsky, Kiter, what are the top 3 things that they're reaching out to y'all for?
Well, the law firm wise, certainly if they need to know who's the best attorney at WBK or otherwise, and when something goes wrong. So a lot of times I'm like the oncologist, something will go sideways in a state exam, a CFPB. Of course, CFPB is not doing exams today, but I've participated in responses for civil investigative demands, CFPB, joint exams, that kind of support that way. Or when a state regulator is, something's gone wrong with their application, whatever the issue or their license renewal, that's number one. They certainly call us a lot because of Mitch's role in the industry and the opportunity in our team for mergers and acquisitions. And I think we have 3 going on at the present time.
Okay.
That are hoping to close by the end of the year or soon thereafter. Or just any other of the state licensing issues. That's more for me. But I mean, it can be anything that's going wrong. We need a new policy. We need a procedure. Our firm does a lot of servicing, a lot of origination, policy development, review, preparation for different state exam, multi-exam exams.
Okay. Very nice. Let's tackle LO Comp first. I mean, I've covered this topic for 2+ years on TLOB. You and I have even talked about it offline.
Yep.
What is going on right now in terms of loan officer compensation? And speak what you're seeing and maybe even what you're hearing. And then what should we expect any changes to happen over the next year or 2?
We'll start with what I'm seeing today. I mean,
okay.
Number one's a lot of questions. Can we do this because, there's no CFPB? Number one, I would say, just because there's no CFPB doesn't mean the rules are gone and you can just do whatever you want. You have 3-year record retention. You always have the opportunity for states to come after you. If you're an IMB, mortgage broker, mortgage banker, the biggest hook you have is your license and ability to continue to do your business. That's a state regulator that has that. I know people will always mention the state attorney generals can come after that too. Remember the first side that generally the enforcement arm for a state, if they have to go to court or they have to take you to a hearing, is going to be the state attorney general. They hear enough of those, they will come after action on their own, separate of different complaints or license coming from your state regulator. And then there's always the plaintiff's bar. Many of these rules and regulations also have private rights of actions. You could be sued in a class action lawsuit, and who wins in class action lawsuits?
The lawyers.
The lawyers.
Every single time. So I guess this is what I wanted y'all to hear. And I didn't know that was going to be your answer. Like, you and I knew this was going to be asked of you.
Right.
But I will come out and say it. The mortgage industry is blatantly violating LO compensation rules, period. Okay, I said the industry. I'm not naming one particular company. And I'm sure they each have found an attorney that was willing to roll their eyes, let out a big sigh, and say, sure, go ahead. But that's my belief. Okay, I'm one person, and people can disagree with me all they want, but I'm pretty strong when I read LO compensation rules as are laid out by the Dodd-Frank Act, enforced back in the day by the CFPB before they were declawed. I believe we as an industry over the past, going on now 6 years, it's gotten terrible the past 3 years. And so that's my take. But what I loved about what you said, the warning, because I could be batshit crazy and totally wrong.
You're not.
Okay, cool. Thank you for that. I'll buy you a beer now. But If I were, okay, then so be it. But if I'm not, just because nothing is happening today,
correct,
doesn't mean that something can't happen in September of 2028.
right.
That doesn't mean that a consumer can't get together with three other buddies who all did a loan with your branch or with your company, find an attorney who wants to get a big fat paycheck and file a lawsuit.
Right.
But unfortunately, I don't see how we are going to slow things down, reverse them, correct the course unless something catastrophic were to happen. And I don't want to wish that upon anybody, but at the same time, yes, as an advocate for our industry, as a fellow CMB, I don't like where things are going, and I'm fearful that they're not going to get any better, but they'll get worse before maybe it takes one or two people being slapped on the wrist, and then the rest of us are like, oh, crap, that's our wake-up call.
I'm scared of it happening because it will put a stain on our industry. Again, I'm not an attorney, but my number one piece of advice is if you want to change your LO comp practices and you want to be more aggressive, get an attorney, get a law firm, have them review what you want to do, update your policies and procedures to say that's what you're going to do, and the validation from the attorneys with a legal opinion that you can utilize if something goes wrong down the line. That is a must to understand. I know that a lot of things we both see and hear about will not be approved by a law firm, would not be approved by me. I think I mentioned to you when I talked to you last week, I got a phone call from somebody going through a divorce, and he kind of told me what the practice was and how they disclosed this. And I said, at best, that's problematic. And he goes, what do you mean? I go, you're violating the rule. I said, again, I'm not an attorney, but no attorney is going to tell you what you're doing is okay.
So we won't divulge the details, but imagine this, y'all. Like 50% of marriages end in divorce. So imagine going through a divorce and your spouse, your soon-to-be ex-spouse's attorney, because look, in divorces, we're looking at alimony, we're looking at child support, we're looking at income statements, division of assets.
All of it.
And when looking at your income, then looking at your employment agreement, which they get through discovery, all this happens in a legal proceeding, all very normal. They start asking you questions about how you're paid. And imagine you LOs and you mortgage brokers out there just start describing to your spouse's attorney, your ex-spouse's attorney, how you're getting paid. And that attorney says to you, I don't think that's legal.
Sounds like fraud.
Sounds like fraud. You know what? Instead of submitting this information to the regulators, how about you just sign off on these unfavorable terms of the divorce for you? In exchange, we won't turn you in. And now all of a sudden, this person's stuck between a rock and a hard place. Do I let my ex-spouse's attorney basically blackmail me so that they don't turn me into the regulators? Or do I take my chances that me and my branch are actually following the rules, tell that attorney to pound sand, but what if they're right and what if I'm wrong? Like, these are real world things that are happening.
Yep.
And I feel like sometimes I'm Chicken Little, and I don't want to be Chicken Little, but I feel good that I know the rules and I feel like I know what could happen. And there's so many that honestly, they're ignorant to what is right, meaning they just don't know. So all they know is what others are doing. All they know is what their branch manager said they could do. And they're like, well, so-and-so is doing it, so I'm going to do it too. Well, two rights don't make a wrong. I mean, just because my buddy can drive drunk down the interstate and not get a DUI doesn't mean that I won't not kill somebody, right? It just means my buddy was an idiot and got away with it. It doesn't mean that I can be an idiot and also get away with it.
So 2 points to what you just mentioned. Number one, the number one source for complaints that go to state regulators, that go to attorney generals, that go to anything, it's the X factor. Ex-wife, ex-fiance, ex-girlfriend, ex-employee, whoever, somebody that, you used to be involved with a relationship, contractually or otherwise, and now it's gone south. And they, it will come about. It's, things that violate, lies don't stay lies forever. Violations don't stay violations forever. They will come to light at some point. And I mean, if you look at the different enforcement actions the CFPB has done, they will go after people individually. And CFPB, LO Comp, like RESPA and many others, there's personal liability for the individual for accepting, not just the company that's paying it. Now, they tend to go after the companies because they have the big pockets.
Correct. Yes.
But still, it doesn't mean that individual is going to get off, scot-free. And you don't want to lose your license because that's your ticket. Once you get your license revoked, you're out of the industry. You can't go work for a bank or anybody.
You're SOL. In fact, I mean, I even had people I couldn't hire in because they had a different license revoked, right? So it wasn't even like I had someone who had their law enforcement license revoked, and I couldn't hire that person on to be a loan originator because it was, at that standpoint, they checked the box. Yes, I've had a government license revoked. And we couldn't move forward. So yes, it's very important that people know it, that it's not just your company, not just your branch, but it's you individually. Right. Let's talk about CFPB. We, in my opinion, my experience, aren't going to see the CFPB do anything when it comes to LO comp. However, as you stated, it doesn't mean that individuals and states could not do something. But let's just talk about the CFPB for a minute. Outside of LO comp, I mean, is what we have what we're going to get, which is basically a toothless, clawless, furry, warm body that is not really well maintained, it's not taken care of, and it's not going to do anything at least not until 2028.
That is my fear. My other second fear about that is that the CFPB will never be back. I'm not going to say that the CFPB needs to be 1,600 plus employees. They certainly padded on under the certain administrations. The pendulum that swings back and forth. It was thought when the CFPB was created that that momentum would over time just slow down, and the pendulum that's swinging back and forth would end up in the middle. Unfortunately, the political nature of the CFPB has just provided more and more momentum to be like the battering ram to smash whatever the previous administration did and 100% reverse course. And that's very problematic for our industry.
Yeah.
Well, I could do this, I can't do this. We're going to have a repeat offenders database that mimics exactly what the NMLS Consumer Access does, and now we don't again. It's easy for administrations to go beyond the scope, beyond the rules as written, and to come up with theories and then enforce upon that. And we'll settle for you with this and keep it non-public, or you can take us to court. If you contest a CID, civil investigative demand, it becomes public. Everybody will then know you're being investigated for something. If you're a public company, that goes bad. If you're a private company, your employees are going to find out, and then it's like, wait, we're doing what? It doesn't win anybody.
So listening to this, if I were running a mortgage company or running a division or running an area, heck, running a branch, do I celebrate? I'm like, woohoo, like mom and dad are going for the weekend. Let's throw a kegger. Or is this really not overly positive, not having a CFPB, because each state now has their responsibilities to slide in, and potentially the states have been sleeping because mom and dad were home. And it's kind of like me growing up.
Right.
I had an older sister. Okay. She was basically like a second mother. When my parents were home, she was my sister. But the minute my parents went out of town, she felt like she had to be my mom. Right. I'm talking like caught me trying to sneak out on a Friday night to go hang out with my friends.
Right.
And literally like berated me as if she was my mother versus like trying to be my cool older sister. I would guess, and correct me if I'm wrong, that let's just say no CFPB, theoretically, like it ain't there. But does that mean every state or some states are now all stepping up and now they feel like they need to be that older sister who's now becoming the mom?
Over the last 10 years, state regulators have been increasing their level of enforcement, their level of examination, and level of supervision. It has increased. I had a friend who got a state exam. He's only licensed in Ohio, and he got it in the summer, and he goes, wait a second, I had a 78 questions on my manager questionnaire to prepare for my exam. Why am I getting a CFPB exam when it's just the state of Ohio? And I said, that's the direction we're going with the system over time. It has gradually risen to where it was when this was all put in place in 2008, 2010, which was, let's just show up and check the state forms, make sure you got your license hung on the wall, we're good, you've got no complaints, and out. Now it is a much deeper formal review, including multi-state examinations. It has risen to that point. So it may not be exactly like the CFPB, but I would tell you that most state regulators say, we haven't gone anywhere. We're not going anywhere. We're still your prudential regulator. We hold your license. Remember, we're here. And hopefully the CFPB will come back at some point, because we do need to have that single regulator that says, no, this is what the rule means, because we don't want to get to the point where, Massachusetts is, starting to interpret RESPA differently than California, different than Florida. I don't see that happening yet, but it's very easy to
Over
happen.
time it would.
Over time,
Over
as
time it
people
100%
change,
would, yes.
Administrations within the states change too. And the other part is, I would hate to see the CFPB being gone, because if there is no police out there, if there's no one doing it, then we in this industry have to compete against those that would blatantly take, advantage of consumers. I remember back in the day when I was a state regulator, we shut down companies that ran up credit cards from their customers, because they would take the application, they get all the information, and we did a joint enforcement action with West Virginia for somebody who ran up credit cards, and then the people didn't want to tell on the mortgage company because they wanted to get the house.
Yeah.
You don't want to have anything where it goes south like that. We need somebody out there who can do this and protect us. And there's no way we compete against those companies that will blatantly violate state and federal law. And then puts a stain on our industry. And those of us, CMBs, all of the ethical companies out there, and I know it's everybody watching this show, that we have to compete with that, and we can't.
No, I mean, it was, and I'm not going to get into this because we're probably short on time already, but I remember being a rookie loan officer, right? 2005, 2006. And I'm calling on real estate agents. And the first thing that real estate agent would ask me was, well, do you have any of those pick up pay loans? Right. I didn't have a pick and pay loan, but are you doing any of those subprime loans? Are you doing any of this? And all the things that people would say helped create the bubble that bursted, that created the financial crisis of 2008, 2009. Blood was on all people's hands.
100%.
And it was funny because, consumers were like, oh, those effing lenders, and realtors were like, oh, you crashed the economy. I'm like, whoa, I crashed it? Because I was sitting down consulting with consumers saying, hey, what's your comfort monthly payment? They would tell me $1,600. I'm like, okay, well, the home that you're looking at is $2,200. And they would say, well, I need that home. I'm like, well, you just told me $1,600 is what you're trying to pay.
Right.
But we had a loan program that they could get into. And they chose that loan. I had realtors that wouldn't refer me if I didn't do subprime or pick a pay. So I'm a 25-year-old with a baby on the way trying to provide for my family. Yeah, I mean, this realtor saying I'm only going to send you business, yet I was the one that was supposed to wear the scarlet letter. I said, look, I will wear my I'll wear my portion of that letter.
Right.
And that is, I agree with you. That's why we need the CFPB. It's why, we're telling y'all tuning in, don't think just because the CFPB right now is dormant that you're not being regulated. You have 3 years, right? Statute of limitations, and you have states, and those states will increasingly become more involved in regulating. And we want this, as much of a pain in the butt as it is, as much as we can talk about how it should be fixed, made better. What we don't want to do is have to start operating to the lowest common denominator,
right?
Because that lowest common denominator could be very well crooks and thieves, at which point we all have to then start being more like them if that's what it means to stay in business, to keep your employees paid, your company operational, et cetera. It's not a good look in general. What are your thoughts on, I can't hop on a call, I can't coach a loan officer, I can't speak at a conference without somebody talking about hiring realtors,
right,
and essentially paying them for referrals. Are you seeing this across the nation? And then is it being discussed in your inner circles?
Yes, it is being done more and more. And we are a reactionary industry, same thing with LO Comp, while they're doing it, I need to do this. Again, if you're going to do this and that's going to be something you want to add to your business, get legal advice, get a mortgage, attorney, somebody who knows these rules and isn't going to read them and try to understand them, because there's a lot to interpret over the years, from RESPA, from loan officer compensation, from data privacy. I mean, there's more than a handful of regs, rules, and laws that this all overlaps. So is that realtor going to work for the same company, or are they going to continue to work for where they are real estate agents, where their broker is at? So now they're working for two companies at the same time. How does that work when, I'm sharing something with you, Dustin, while we're looking at a house? Is that you, the realtor, or you, the loan officer? whose information am I giving? And then do you share it from one to the other without proper disclosures and Graham Leach Bliley? And I mean, there's a whole issue here.
You just dropped a little GLB on us.
It is.
All right.
It is very complicated. I'm not going to say you can't do it. I was on a panel at NAM National a year ago in Vegas. Troy Garris from Garris Horn, Josh Weinberg from First Line Compliance, and we went through this in depth for the room. And the panel ran long because people had so many different questions, and then we continued in the hallway. Can you make it work? It is possible, but it has to be done the right way. Your policies and procedures have to be there. And even more so, the oversight has to be a compliance plan on steroids, because now you're controlling somebody who doesn't work for your company, that has separate email. How are you monitoring what they say in their emails that aren't going to get you in trouble down the line? And we know people like to take shortcuts.
Oh, God, yes.
We've seen the recruiting things. I've had people send me, look at I have to compete with. This is their, the business development person for this company that's hiring real estate agents. Look what they're saying. All you have to do is get your license, give us the referral, and we'll do the rest. And that's wrong. That's 100% wrong. To earn a commission, you must perform the job. You must do. I mean, the HUD put out, what are the activities for a mortgage broker? It's very similar what the state regulators are like. Are you taking the application? Are you calculating payments? Are you counseling them on these? The RESPA issues and stuff that are out there, again, you need an in-depth discussion, something you're not going to learn on a podcast, from a legal competent mortgage fact attorney to understand what you're going to do, and then look at what your oversight is on a quarterly basis, because it's very easy and very quick, and it only takes one to go wrong that could make you be in the headlines.
I would say we would see this in the headlines before we see LO Comp, and I would like to see LO Comp in the headlines before we see this in the headlines, personally. However, because I think we could LO Comp in the headlines, this will get nipped in the bud quickly.
Right.
And guys, we're not talking about an agent who is duly licensed. Like a duly licensed agent who's performing work as a realtor, work on the loan and getting compensated on both sides. If that's your freak flag, then fly it and do you. We're talking about mortgage companies, national lenders, reaching out to realtors saying, hey, I can basically bypass RESPA Section 8, pay you for referring me, not do an MSA, and all you need to do is just give me the name and the phone number and the email address. We'll take care of the rest. And it's like, no, you don't. I remember trying to do this legally, right? And having to say, I need to make sure you've done these 6 things.
Right.
I need to make sure they applied on your website. I need to make sure that when I call that person, that I talk to them about their conversation with you and they actually remember that conversation.
100%.
At that standpoint, sure. If you want to have a loan partner who takes over like most top producing LOs do, cool. But at that point, you did your job. You gave advice. You talked them through their options. You told them about the next steps. And then you walked them through what your next steps were, right? So it's like, hey, Bob, it sounds like from our conversation, FHA is going to be great for you because you're only going to need 3.5% down. We can get the seller to pay your closing cost. And based on you looking at a home at $400,000, your payment's going to be somewhere around $3,000 a month. Hey, the next steps are, I'm going to send you a link to my website. I need you to apply online. I need you to send in these 5 documents, pay stub, W-2, tax return. Sure. If someone's doing that, I think you can stand on your own 2 feet and you can advocate for yourself.
There are still questions and mazes that need to be navigated. Because if they're working for a separate company, but a large number of their closings, their real estate transactions go to that mortgage company, are they steering?
Oh, wow.
I mean, there's a question there, how is that working? Again, how is the information being shared? Are you always communicating loan docs through the loan email and not the real estate information? I mean, there are so many different lines there and ways it can go wrong.
Well, thank you for that, because I just gave what I thought off the top of my head would sound the most compliant. And you're like, yeah, that's a good start, right? I give you 50% for putting your name on the paper, but there's another 50% you have to go out and earn. Which is why we all need, as much as we hate them sometimes, as much as sometimes, God, I hate stroking that check to my attorney, not you guys, but like my personal attorney. I do know what value he provides to my life, and it truly ends up becoming the ounce of prevention versus the pound of cure. So our last topic, And just briefly bring us all up to speed.
Can I just put a
Yes.
couple more thoughts
Yes.
to think about? If you're thinking about doing this with real estate agents, how are you going to pay them? Is it going to be 1099 W-2? Not all states allow 1099 mortgage originators. Make sure your job descriptions, all of that matches what your existing job descriptions are. I can't have a job description for a real estate agent different than what my other one is because it's the same job. You know, you also can't do dual agency in every state. Not every state allows that. So things to think about. Again, you've got to look at this 360 degrees and not just a circle, but it is a spear above, below, and from every other angle to make sure that you understand this can bite you in the rear end and you don't want to be that headline.
Proceed with caution.
100%.
Yeah, reach out to Bob.
I think that was our point of our panel that we did in Vegas. It may be possible to navigate, but is the juice worth the squeeze?
Yes. Thank you so much. No, I mean, that's, again, these are two topics. LO comp and this, I could get on a soapbox for probably 60 minutes.
We could talk
and
hours.
like, y'all, I'm a dude who only made his money by doing loans, right? And then when I was not making money doing loans, I was making money running 9 branches, and those branches were doing hundreds of loans a month. If there's a way to do a loan, I want to do it. As long as I can do it for 20 years and not just 2, because after 2 years, if I lose my license, if I get sued, if my company gets put under, then it was all for naught.
Yep.
It's no different than like trying to do like anything fraudulent. I tell young LOs, you're not looking for a career doing 1 loan. You're trying to do 1,000 loans, right? I say the same thing about working with realtors. You're not trying to work with like that one realtor. If that one realtor doesn't do business the way that you do business, you don't, because you're trying to work with a lot of realtors over the next 10, 20 years. Yes, don't cut off your nose to spite your face, right? Like that's
100%.
That's what we're trying not to do.
It takes thousands and thousands of loans to build your career. You can lose it in 1.
Yes. Yeah, facts. So let's do this. Briefly, quickly, what is going on with the NMLS? I knew nothing about this, Bob, until last week. And then when you shared it with me, I was like, well, we have to talk about that too. Right. What is it?
So the NMLS, the Nationwide Multi-State Licensing System, which again has more than just mortgage on it. It's, you know, lots of consumer finance, money transmission, check cashers, all the like. The disclosure questions are being updated next year. It's going to be implemented March of 2026.
This impacts anyone who has the NMLS number.
Control persons, MLOs, everybody that has it. You know, the attestations you go through. You mentioned before, you couldn't hire somebody because they had a license revoked. Mm-hmm. So the language was updated to better align with the Money Transmitters Model Act. So there were variances in how some of those were. Some of the questions did not use the same terminology in the same way, and it had been an issue over time. And this was put out for comment in 2022. It was adopted in 2023. And it's now part of the current NMLS modernization. And it's not a question of, does this need to happen? Is it going to be terrible? The potential bottleneck could be because everybody's going to have to go back in, answer all the questions again. Some previously no questions may now be a yes.
Okay, so right there, you're going to have to go back like you do every year and do your attestation.
Like you do in the fall, but you're going to have to do it at this time.
But you're going to have to do it in the spring.
In the spring.
And the questions are going to look a little different. So something that you used to answer no to, because of how it's going to be asked, you may very well answer yes to.
Correct.
Which then, could that open up Pandora's box? Could that be additional scrutiny? Could I, as an originator, go from, I've been doing this for the past 7 years and no one cared, now all of a sudden they care about something in my past?
There will be questions asked. It is clear that everybody has said, hey, the impact of this should not be the same thing that we knew about from before will now be a problem and you no longer can be licensed. That is the hope, that we don't have those. But again, you can't just automatically go through and, you know, none of your previous answers are going to carry over, so you're going to have to update. The challenge will be is because of everybody doing that, all the state regulators have to review those as well. And that's the bottleneck. It's a group of folks that are overworked and underpaid, you know, not the largest, you know, number of licensing people in each state. And I've had many people, well, why didn't they just do this? Because it'd be easier for me to do at the same time I'm renewing my license.
Okay, so worst case, for anyone trying to get a new license in a new state during this time period, it may take prolonged periods of time because these people are going to be bogged down on this project.
It certainly could. It may bog everything down. M&A is trying to get our advanced change notices approved, because every time somebody buys somebody else, you have to get all the state regulators to sign off in advance before that change can go through.
Wow. And then worst case, there could be a handful of people
Right.
that question wasn't asked of them 3 years ago, 5 years ago. Now it is. And because of their answer, it may put their license at jeopardy.
Yeah, I can tell you that I know the NMLS is coming out with FAQs, some guidance documents for people that are going to have to do this. They're expecting it to be released in mid-December. I actually just checked on Friday to see the status of that, if we could get an advance. It's not ready to be released yet, but it will be out there. And I know it'll be shared by MBA of Florida, others. I'll make sure to share it with you so you can make it available. And of course, I'm happy to come back and talk if we have other snippets or updates.
Yeah, it's going to be interesting, because I think it's going to be one of those things that we're talking about it today, but honestly, if most mortgage brokers and LOs are a lot like me, I'm like, talk to me about it when it's in front of me.
Right.
And it's going to be in front of me when I'm like, damn it, what do I have to do? Then I'm going to log into NMLS. Dang it, where's my password? So I got to go find my password. I think I'm clicking 3 buttons. And I was like, no, you're not clicking 3 buttons. You're actually answering 10 questions all over again. Right. So then I'm going to start doing that. And maybe for most of us, that's all the frustration we feel, right? I'm not used to doing this in the spring. I'm not used to not having it auto-populate. Okay, whatever.
Right.
But then it's, but I'm trying to hire this LO, or I'm trying to get this state license, and both are taking longer than they should.
Right.
Well, why is it? Well, because this is going on. And then you're going to have like big dogs like you doing merger and acquisitions. Like, hey, why is this M&A deal taking, twice as long? It's
Right.
like, well, because we're waiting on the states to do what they need to do. So at least this will offer clarity. And then for the handful of unfortunate, yeah, it may force them into a new career, because the questions that used to be asked are different than the questions that are being asked today. And those questions, when I start divulging information, now make me go from being licensable to unlicensable.
Right.
Whew. Yeah. So stay tuned. Like you heard it here first. What's it called? Like, what's the technical term behind this change?
It's update for the NMLS disclosure questions for the attestations. So
that is it.
It's not, there's no great, trendy name or something to tag it with, but we'll make sure that it's out there and it'll be shared.
Yeah. We're talking about today. It'll be written about in Housing Wire the week after it comes out. Like, once we feel the effects of all of this, right, now it'll make national news. Until then, you have to be friends with guys like Bob to be aware that this is going on. So last 2 questions. And these are not compliance related, not even mortgage related. These are Bob and Dio related questions. I love to ask as many guests as I can these 2 questions. What's one of your favorite books that you ever read and you recommend it to as many people as you can?
I don't read books as much anymore.
Listen to podcasts?
I listen.
Or...
I'm a podcast, listener for you, frequent emailer when I follow different things.
Anytime I say something that is a little bit off, I'll get a text from Bob. Love this episode. JC was so funny. FYI, I don't know if that's really what that regulation means, but nice try. I appreciate that.
I don't do it publicly. I share it with you so you know that if it was something that I think was, either use the initials wrong or something like that, that it won't happen again.
Oh, you mean because I'll call the NMLS the national, and you're like, no, it's nationwide.
Yeah.
Yeah, like, I do that all the time.
People will say mortgage all the time, and that's what originally was. That's what it is in statute, but as they've added license, it's just,
okay.
So some of those small tweaks.
So if you don't read books that often anymore, what are your favorite podcasts outside of TLOP?
I like to listen to the housing conference, the housing conference, Dave Dworkin, out of DC. Very insightful, always deeper. I always know topical at it, and it's great when I'm doing my walks that I can listen to it and get in depth. And some of those are ones that I have to listen to 2 and 3 times to fully understand the depth of what they're talking about. Because, again, experts in their field explaining it to mortgage people. Yeah.
And then what is something you learned, life lesson-wise, the hard way? It wasn't taught to you in school, wasn't talked about in your household, and maybe something that, when you were raising kids, that maybe you shared this with them because you had to learn it the hard way.
Growing up for me, my dad always said nothing worth easy, nothing worth having comes easy. So you always have to do that. And my mom always said bad actions have bad consequences. So I learned that through life. I know that my kids understand both of those. precepts. And my oldest daughter, who now just had my second grandson, she said many times, I can't believe how often I hear your words coming out of my mouth.
Oh, that has to make you feel super proud.
Yes.
Yeah. Bob, if people want to get a hold of you, how do they get a hold of you?
If you Google my name, Bob Niemi, CMB, you'll find all my contact information. I'm on LinkedIn. You can go to thewbkfirm.com. That's our corporate website. Look for me. Look for any one of the attorneys there. Reach out. I'm happy to introduce you to anybody that's within our group. Help find exactly what you need. Or, Niemi at thewbkfirm.com is my email address.
Awesome. Y'all, he is Bob Niemi. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. If this was your first time tuning in, first, thank you. I don't know if you're on Spotify, Apple, or you're tuning in on YouTube. If you're on Spotify and Apple, give us a 5-star review. That's how we can share this type of content with more people, is because they see our reviews and it makes them want to tune in and check out what we're doing. If you are on YouTube, make sure you click the subscribe button. By the way, if you're not on YouTube, you should check us out on YouTube. We are TLOP Entertainment on YouTube, because we are more than just a podcast when you're on YouTube. That's where we have Coach's Corner, we have Mortgage School, we have an entire segment called Talk Mortgage to Me. It's an entire channel dedicated to the mortgage industry and all of those people that we serve. Bob, thank you so much for your time. He's Bob. I'm Dustin Owen. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.